Now, your firm has grown its reputation by advising hot new startups in China from Didi to Meituan Dianping. But as the overall sector has cooled, so has your stock since going IPO, since going public. So what's your view on the state of deal making in China right now?
Good to see you again, first of all. Based on our number, the deal activity has come down, a big notch, this year, both in terms of the fundraise as well as the amount of investment. On our measure, it came down anywhere between half to 1/3. So you could say the overall climate is definitely cooling. Still, most of the deal got done, in the later stage. The unicorns still be able to raise a lot of capital, so it shows you there's a flight to quantities. But at the same time, there's still a lot of interesting early stage innovation happening. A lot of stuff happening in 5G, Internet of Things. Healthcare is still very hot.
Has the venture capital industry reached a bottom, though, or can it continue to slow even further?
No, I think it's not so much in terms of the supply of capital. The top fund still sits on a lot of dry powders, but people tend to be more cautious because of what's going on at a macro level. People want to take more time, and then people want to see whether they can negotiate better deals. But yeah, there's still a lot of dry powders out there.
You've said before that your ambition is to build China Renaissance into a global company that has a seat at the table with the likes of Goldman Sachs or Blackstone, BlackRock. But as China is actually opening its financial sector, they're now allowing foreign firms to own their joint ventures. How does that change the competitive landscape for you?
No, I think overall is a positive that China opened up its domestic capital markets to foreign investors, because the foreign investors can bring best practice. Also in a way we're pushed for the market reform. That in itself is a positive for a private sector company like yourself, right? I'll give you one example where 7% of the free float market cap of Asia currently now is held by foreigners. So that's a very positive.
So you're not worried about the increasing competition?
No, we're not worried about it. We've been competing with the big guys all the time. So
over these past few days, we've been talking a lot about barriers to talent and capital.
Yeah.
Some U.S. lawmakers are calling for as extreme as the forced delisting of Chinese companies from U.S. exchanges. I mean, what's your assessment of the situation?
Well, I think at first, practically, I think it's probably difficult, technically. I'm not sure what's the legal avenue to do that. Secondly, I don't think a very crucial thing, a very smart thing to do. Because at the end of the day, the biggest loser would be U.S. institutional investors.
But does this change the way you advise your companies? Are you advising Chinese tech companies to look at other markets, Hong Kong, mainland markets versus New York?
This is definitely a turbulent time. Our clients needs a lot of our advice because sometimes they're confused given all the information. So I would say, from a client's perspective, as well as in terms of how we interact with our clients, we need to help them assess the overall risk, the different markets. This is something that was not, considered before, but it's something that our clients definitely are considering now.
Now, the Alibaba IPO, the listing in Hong Kong, how significant is that to the Hong Kong markets and as a vote of confidence that it still can be a global financial hub amid this social unrest?
I must say, given everything that is going on, the financial market in Hong Kong show remarkable resilience. The fact that the deal got done, relatively well shows you the strength of the market. We'll see. That hasn't trading yet. We're remain very interested to see how the stock trades. The liquidity is generated. Overall, I think it's a positive.
Would you advise investors to be cautious, though?
Cautious in terms of investing in Alibaba in Hong Kong? Mm-hmm. I think it's just the extension of the trading values, and I think at the end of the day, with the stock connect, they'll be able to bring the Chinese liquidity. Overall, I think it'll be good for the company, good for the investor as well.
And are any of the companies you're advising shifting or changing their plans for Hong Kong?
Because of what's going on?
The social unrest?
Not yet. As I said, the financial market remain resilient. We haven't seen the impact on the financial market yet. I don't think that has been a major consideration.
Going overseas has always been a challenge for Chinese tech companies, as you know yourself. But now with the growing scrutiny of Chinese companies abroad, look at what's going on with ByteDance in terms of TikTok in the US. What do you think this current environment means for the ability of Chinese companies, the new wave of Chinese companies, to go global?
I think on the one hand, the company really needs to assess their business risk, very carefully. in terms of market risk, in terms of technology risk, because what's going on, the tech war. But on the other hand, it will further encourage them to look at diversify their business outside China, maybe branching to more emerging markets. We definitely register increasing interest of our clients look at markets outside China, not necessarily U.S., but in terms of Southeast Asia, India, other emerging markets.
So they're sort of deprioritizing the U.S. then?
I don't think U.S. has never been the sort of top focus of Chinese firms.
Mm-hmm. Now, Alibaba, Baidu, Tencent were part of the first wave of these big internet tech giants. Now you have the TMDs, Toutiao, ByteDance, Meituan Dianping, Didi.
Pinduoduo.
Right.
Obviously.
What's next, though? What's after that? What are you looking at?
I think we're still very positive about AI, big data. I think they will have a lot of applications. We're starting seeing more and more business-based applications. We're helping enterprise solutions help the Chinese business to be more efficient, better at the management. We're also seeing a very interesting new generation of indigenous consumer brands come out of China. So basically the younger consumers are want their own brands, want something they can associate it with. And then we got some really, really talented entrepreneur utilizing the multi-channel, the availability of e-commerce to launch their new products. So a lot of exciting new stuff coming up.